Our global winners portfolio is a cross-asset momentum strategy. In other words, it buys funds which are moving upwards in price. Now that's useful because it lets you identify trends across different asset types, but also shows you turning points when those trends come to an end. And that's precisely what we seem to be seeing at the end of 2022 in the energy space. So you'll see that reflected in this month's portfolio. Now, the purpose of the portfolio is to try and beat the S&P 500, and we're really excited to announce a competition where you can pit your stock picking skills, but also your fund picking skills against other PensionCraft viewers. And you can do that for free on stockcar.io, which is also sponsoring this video. So let's look at our global winners portfolio in a bit more detail. Let's begin by looking at that key question of whether the energy market is now fading. Now, the US over the course of this year has been very much a one-trick pony. The only sector with very large positive returns is energy, which is up 47% year to date. Every other US sector has fallen. And if we look at US earnings or profits and split it up into the S&P as a whole, that's the blue bars, and the green bars are the S&P with energy stripped out of it. Notice what a huge difference that makes. So for the third quarter, the year-on-year increase in earnings would be 2.2% with energy, or minus 5.1% if you strip out energy. And for the year as a whole, stripping out energy takes us from a 6.1% year-on-year growth to a minus 0.6% fall. Now, at a certain point, as energy prices fall, that boost to earnings for the index as a whole will start to fade and actually go into negative territory. And if analyst forecasts are correct, then we're going to get a boost to profits from energy for the next 2 quarters. So that'll be Q4 of 2022 and Q1 of 23. Then from Q2 of 2023, the energy sector will start to be a drag on profits. So if we look at this graph, which shows the quarterly profit growth, blue is for the index as a whole, green is stripping out energy. The green bars are smaller than the blue bars because energy was a net contributor until we get to Q2 of 2023. So that's the turning point if these forecasts are correct. So why is the price of oil falling, given that we've got all of these supply issues right now? Well, the primary reason is weaker growth. So the IEA has a forecast in November that demand growth will fall next year to 1.6 million barrels per day from growth of 2.1 million barrels per day this year. So still growing demand, but growing at a smaller rate. And that's because of weaker GDP growth, primarily in China, because China's demand for energy is considerable. Simultaneously, we've got the European energy crisis, where a weakening currency has made energy more expensive. So both individuals, but also companies and countries in Europe are trying to cut back on their energy usage. So all of this combined means that the energy prices we're seeing in 2022 are falling quite sharply. And this is going to erode the top line profits for many energy producers. Now, we thought it would be a lot of fun if we ran a competition to see who the best allocators are out there amongst our PensionCraft viewers. So you too can have a go at beating the market, and it's not as easy as it sounds. Now, apart from the prestige of being the best allocator out there, you'll also get wonderful prizes. So the first wonderful prize is premium membership of PensionCraft. So you'll get that for a year. You get access to all of our videos, our members-only videos, but also access to our Slack channel, so you can interact with the community, but also our suite of trackers, which allow you to monitor macroeconomic developments as well as markets. And we're going to run the competition on stockcar.io, who've also generously offered a $250 cash prize for the winner. So you're probably wondering, how do I enter the competition? To enter the competition, you have to create a free account on stockcar.io. Then you have to create a public portfolio. It's very easy. You just have to give it a catchy name, a description. Just make sure that when you choose the portfolio goal, you choose Beat the Market Contest, PensionCraft. Then you have to choose to make the portfolio public. Now, there are also some constraints on the funds you can choose, so you have to have at least 5 funds. You can also have single stocks if you like. And once you've created the portfolio, you can't adjust it or tweak it en route to the closing date of the competition. Now, I strongly recommend that you take a look at this page, which is the help page for the competition, which lays out all the terms and conditions, but also exactly how to take part. The competition will run between December the 20th and March the 20th, a 3-month period. The person who wins the competition will be the person with the greatest return over that period. And the way that Stockcard's going to calculate the performance is listed in this paragraph. And if you want to see precisely how the returns are calculated, you can see that here. To take part, you have to be over 18, and we strongly recommend that you follow our social media channels because we're going to publish updates on a regular basis so you can see how you're doing. There are also detailed instructions as to how to enter the contest. And you can see that we're going to announce the winner on March the 20th. Now, if you do have further questions, you can ask them via this live chat box in the bottom right-hand corner of the screen. This is what the free version of Stockcard looks like, and you can use that to enter the competition, but also track my portfolio. Just search for the word Ramin and portfolios, and there's my portfolio, Ramin's Global Winners. And you can see that the portfolio now has over 1,000 followers. To join that group, simply click on the follow bell, and you'll be notified of any changes I make. So this month, for example, I've sold my high dividend yield ETF and my DB energy fund. And if you do go for the VIP subscription, you get access to a huge amount of really nicely structured data about single stocks, but also about ETFs. You also get to create unlimited personal watch lists and portfolios, and you get to create unlimited numbers of ETF screeners where you look for certain fundamentals. So for example, you could create an automatic screener that looks for momentum as well as value. And if you're a viewer of PensionCraft, you get a special discount from stockcard.io where you get 10% off your first VIP subscription. Now let's move on to the portfolio choices for this month. And we can start by looking at the funds we can choose from. And our funds are grouped into 5 categories. We've got 44 countries we can choose from, 18 factors and styles of investing, 11 sectors, these are individual industries in the US, 8 commodity funds so you can get direct exposure to commodity prices, and finally 9 bond funds. And we choose the individual funds for a particular month based on their momentum, so we look at the returns of each of these funds over the previous 180 days, and we select the single best fund in terms of momentum, which makes it through into the portfolio. So we get one fund from each of the categories. So at most in 1 month, we'll have 5 funds included. If none of the funds have a positive return, then that category doesn't submit a fund for that month. Let's look at the historical risk and return for the strategy. Here's the return since 2004. You can see Global Winners is in red and the S&P 500 is in blue, and it has outperformed over that period. And if we look at the drawdown of the strategy, that's shown in the top panel here, that's the fall from the previous all-time high. At the moment, it's completely recovered from the drawdown in 2022, whereas the S&P is still well below its starting point at the beginning of the year. How well did the portfolio do last month? Well, for the country choice, it did very well. So Turkey, which it's been following for a while now, was up 14% from mid-November to mid-December. The high dividend yield ETF also beat the S&P. It was less negative. The 2 funds which underperformed were due to energy reversing course. That was the Energy Select Sector Spider Fund, XLE, and the DB Energy Fund, DBE. Both of those underperformed the S&P. Now, if we'd have had perfect foresight, what should we have chosen over the course of this month? We should have chosen Egypt, which outperformed Turkey. That was up 17%. We should have chosen long duration bonds instead of no bond. And we should have chosen the carbon fund, KRBN. With sectors, XLU, the utility sector, performed best. And in the factors and styles category, USMV, the minimum volatility ETF, performed the best with a measly 0.3% return. And finally, let's go through the choices for this month. Our country choice is Turkey. Over our look back period of 180 days, Turkey's got an incredible 67% return. In fact, it's the only country which has got a positive return over the last 180 days. If we look at the time series for the return for each different country, This shows the 3 best and the 3 worst countries. You can see that Turkey has been outperforming for some time. Next, we look at our factor choice. And here you can see all of the factors had a negative return over this period. So we're not going to have a factor fund for this month. You can see that VYM was in positive territory for last month, but this month it's dropped out of the portfolio. So you'll notice we've sold that fund. Then we'll look at our sector choice. And here we're going to choose energy again, because it's the only sector which has a positive return over the last 180 days. Now, it might well be that XLE also drops out of our portfolio next month. Notice that it's in positive territory right now. It's 9% positive, but it does seem to be heading down. For our commodity choice, we're not going to have a fund for this month. DBE, which is our choice for last month, is now in negative territory. It's fallen by around 6%. So you can see that for commodities 2 now, we've also got all of the funds in negative territory, so no commodity fund for this month. And we're going to sell our DBE fund. And then finally, we'll look at bonds. Here too, everything is in negative territory, so no bond choice for this month. In summary then, our portfolio is now down to just 2 funds. Turkey via the iShares MSCI Turkey Fund and the Energy Sector Fund XLE. So 2 changes to our portfolio this month, and energy seems to have turned a corner. Now don't forget our competition. I think it'll be loads of fun. Please do take part. You don't have to pay to join stockcar.io to do so. You can just use the free membership. But if you do go down the VIP route, you get access to lots of goodies and you get a 10% discount by using our promo code, which is the name of our channel, PensionCraft. And as always, thank you for listening.